Hey, folks, and welcome to Financial Fitness with Patrick. As always, your host, Patrick, presented by Soaring Prophets. And, folks, I might sound really upbeat, but I am currently fighting a head cold from hell right now. So bear with me. What we're going to do is we're going to dive into some of the chart analysis. A lot of people are asking me, like, when you talk about this and you're kind of prognosticating in regards to what pricing is going to look like and how these world events are affecting. We've talked about bond yields. We've talked about what's going on in the Middle East. All of these things are so closely interrelated. But I want to jump in right now, and I want to show you what I look at when we bring these up. So here we are right now. We're looking at the U.S. Canada dollar. This is the U.S. dollar right now over the last year. So here we are, January 2023. We have this chop sideways movement, and we've had this dollar increase in price. You can see that I put some lines on here, and this is so that I can trade off of it. What I'm looking for is supports and resistances. Resistances are like your ceiling in your house. If you are going to have a pricing break through that, it has to do it with some momentum, and vice versa. If we're going to have a breakdown, as we see in the dollar right now, we're trending back down into this range bound area. Okay. So we've went back here in October of 2023. The dollar dropped. That was positive in regards to asset values. We saw the stock market run up. We saw the Nasdaq. We saw a lot of tech moving higher because, again, profitability. You have a lot of these tech companies that are bringing money offshore back to the United States. As we see these blups and falls, right? We have a downward trend. This all ends in the mania of July. So this has all been the move through the AI mania. We had the US dollar dropping. We had commodity prices staying relatively fluid. They weren't falling off a cliff. They were staying relatively fluid. But what we saw here, a big move, was when we go into the US oil. Again, this oil has been continually moving downward. This is a major contributor to your inflation. This is where, everything that's coming to your door, whether it's being delivered, whether, Amazon, it's that time of year. Black Friday was right around the corner, right? Cyber Monday today. We're in a situation where oil has continued to lower our prices. So as you can see here, at the high of this mania, we saw almost $124 a barrel on US oil. Okay. We are currently sitting at $76. Like we're 60% less than where we were, right? So what we've got to figure out now is this going to be deflationary? If oil costs are coming down, right, and the costs are still ratcheting up, because we're not through with inflation, we're just seeing a reduction in inflation. We haven't seen deflation. If you go to McDonald's and you bought the $10 hamburger and Happy Meal and all that last year, it's not $9. Deflation hasn't occurred yet. What we're at now is that we're only at $10.75 as opposed to where we were seeing it going $11, $12, $13. So we're seeing a reduction in inflation. We're not seeing deflation. So we've seen this massive reduction in energy costs, right? So this is oil. How do you heat your home? This is natural gas, right? So natural gas, these are some of the companies that are dealing with natural gas. So Coterra is a natural gas producing company. They're dealing out of the Henry Hub down in Louisiana. These folks have been robbed over the last little while. But what we're seeing is these ratchets back up in the inflationary costs. The reason why I bring this up is that we are currently in the OPEC plus meeting in the Middle East. And OPEC are the oil producing nations of the world. They have a racket is what they have. And what their job is to control petroleum prices all over the world. So every nation that is involved in this, and now we have plus because Russia, we have Brazil, we have some of these outlying countries that aren't allowed to be involved, they're still involved, right? So what we're doing now is that we've seen energy prices drop. We have not seen inflation drop and go away. So as energy prices start to kick back up, why would they kick back up? Because when we go back to this here, again, this is the US oil, we have to take into account that you're going to have areas of profitability. So when we look back traditionally, right, we see a range that occurs. And what is that range? Every time I hit this, what is that range? it's between that $60 and $100, right? So this here, if we look at these huge down moves, this was during Trump presidency where he increased production, right? They talked about at great length that we're opening up the well. The United States is going to become energy independent, right? Here we 2018, 2019, 2020, right? We see energy, we see US oil go negative for the first time in history, right? This goes negative. As long as you could take delivery of it, they were giving you away crude, right? But this as a commodity sits between 80 and 110. That's where it ranges. So what are we looking at now? We're at the lower range of that. And everyone's clapping. Everyone's going, we've killed inflation. Everything's fine. We're going to be just hunky-dory. Well, the problem is, folks, is that we are not just hunky-dory. We're now in a situation where we have headwinds in regards to commodity prices. We're seeing the consumer slow down. We're seeing the expenses that are going into household expenses, right? Let me pop back in here for a second because I want to show us our bond yields again. So here we are on the US bond yields, okay? This is the 10-year. This is your mortgages, okay? At our high here last a week ago, 3 weeks ago, at the beginning of November, we were at a 5.20% bond yield, okay? But what do we see? Things don't go straight up in perpetuity. What do? They roll back over and they hit support, right? These are moving averages, these lines down here. So we're now getting to the position where we could theoretically see back into a 4%, right? And on the 10-year. But what you're going to do is that when you see a 4% come, you're going to see buying power kick back in. There's so much money on the sidelines that is waiting for this to happen. So as rates roll back down, okay, this is where things get scary. So we're 4.325 on the 10-year, and we are 4.74 on the 2-year. This is what we talk about when we explain about the yield inversions. So if I'm going to invest my money for 2 years, they're giving me 4.74%. If I invest my money for 10 years, they're going to be 4.3. That's less. If I'm going to give you my money for a longer period of time, why would you give me less? This is the problem. We have to uninvert these yields. And when we do, that is usually a violent process. And especially when we start seeing candles like this or this, this is where we get violent reactions, okay? Our whole process that we're in right now is going to be super dependent on the next moves from Jerome Powell. Jerome Powell is going to be talking on Friday. He's going to be, I feel, talking down the market. We have seen a parabolic move. Let's look at some of these tech companies. Let's look at Nvidia, the chip company. That's parabolic, right? This movement here from the end of October through to where we are now, last year, has been straight up with very little downside. We've got RSI overbought. We have MACD rolling over. We've got the turbo upside down here. Powell has to come out because the market thinks that he said we're done with rates. He hasn't said it. We've said it multiple times in what we're doing here with financial fitness. He's saying we're data dependent. So as these yields come down, if they're not coming down for the right reasons, if they're coming down because something's breaking, the consumer is wearing out, we're upside down. We have a major problem. And that's where we have to be smart. Now is the time to be looking at our investments. What are we looking at as far as risk? And I think our guest today, Gib Stewart, is fantastic. He's done some really cool things. And Gib, it's a pleasure to have you today. Hello, folks, and welcome to another episode of Financial Fitness with Patrick, presented by Soaring Prophets. And folks, we have a fantastic guest here today, one that we've been trying to get in touch with for a while. Had some technical difficulties on our end the last time we brought him in, had some audio stuff that we worked through. But this is a guest that, this is a gentleman that went all the way from, $288 to $30 million in asset and is working on changing the world every single day. Rolland G Stewart is our guest today. Maybe, James, you can throw him up. Mr. Stewart, how are you doing today, sir?
Doing great. And you?
Well, it's a pleasure to have you. I'm really excited to finally get you here. After our brief little Thanksgiving fiasco, we got you back, and it's a pleasure.
Thank you. Thanks for trying again. That's great.
Yeah, no, I appreciate it. So, Gib, I'm going to call you Gib. That seems to be I love the nickname. I think it's great. So, Gib, tell the people a little bit about what you do. I understand that you've worked in the multifamily space for a long time. You're also a multiple-time entrepreneur, and you've got some interesting stuff working on right now in kind of the tech space, code development, and the Internet of Things. What are you folks working on right now?
Okay, so I retired at 50, and then wait. Then I was able to make the jump to 30 million, and then since then, I took a couple years off and didn't like it. So I've bought 10 companies in the last 10 years.
Wow.
And we're just trying to find niches that we think can go someplace. So the first one I found, actually, I took my book, and people had told me that it should be made into a movie. And I went to one of these worldwide companies that put employers in touch with possible employees, looked for a person that would write the script, a script writer. Got 27 people around the world to talk to me. First one I called was in South Africa, and he and I could not have been further apart on our ideas, and that was gone. Second one was in England, and I think if I ever find a producer, that he's going to do the script writing unless they have somebody they want. And the third one was a young kid across the mountain in Los Angeles, and he had just left a company that he helped build from 2 million to 28 million. So I said, this kid's got some potential, right? And so we talked for about 15 minutes, and I gave him $1 million for 12.5% of his company. So it's called Wilder Way Media, and it's an LLC. You can find it on the internet. We think we're close to selling our first product. That would be in the last 9 months. We've been working on that. He brought 27 products with him from the other company because they didn't want them. Sounds like a way to get out of a sale. Take your own stuff with you. So pretty excited about that.
Well, so Gabe, if I can interrupt there, Wilder Way seems like an opportunity for individuals to get into the media-based business, but lowering the risk dynamic. Again, when we look at some of the larger production companies and larger media companies, it looks like, you're very heavily upfront costed, but you folks are doing it a little bit differently. Maybe you can explain that a little bit for our audience today.
Correct. We're focusing mostly on television, but we do have some big movies, not very expensive big movies, but movies. So we have the television segment and we have the book segment. Book segment is basically what's supporting us right now. The television, we've got some pretty firm hooks out there, and we got people. And the last month, DreamWorks said that if we could find a distributor, they were very interested. So we would hope that would happen, right? Yeah. So if you're lucky enough to get that one, you can go. Right. And we're supposed to find out.
So this is allowing individuals to come into this with a diversified risk portfolio, right? Where they're coming in with less capital tied up initially. Because again, a lot of these come and go. Some fail, some are very successful. And the ones that are successful are usually wildly successful, correct?
That's what we've seen. And that's where we're headed. And it's so I talked to the kid for about 15 minutes and I gave him the money.
Right.
I just think it's such a good play that you got to go for it. And as I told you in some of our previous correspondence, I really do want to be a billionaire. And I'm after that every day.
I love it.
I work toward that end.
Well, tell everyone a little bit about your email that you briefly told me before. Is that you are now how old, sir? If you don't mind me asking,
76.
Can I ask your age? I don't know, how does that
76.
work?
I don't know if it's legal or not.
Yeah, right.
They'll be knocking on your door. I'm 76. 4.5 years ago, I was given 6 months to live. And I said, well, the hell with that.
Right.
And I've been very, very fortunate. There have been phenomenal number of doctors and researchers and so on and so forth that have developed so many new cancer drugs, you can't believe it. I've only been on drugs since they told me I was going to go. And I was scheduled to go into chemo. And 2 days before that, research came back and said, this guy qualifies. And they started feeding me pills. And I've been on pills for 4.5 years.
And I'm guessing that your cancer situation is
Pretty good.
How are we doing? You look pretty spry to me.
I'm finding out next month. So
Well, I wish you nothing but the best, and God bless you with that. I think that's fantastic. But while you're taking this journey, you've got a health journey and a health battle that you're going on with. But you said something kind of impactful, when we first started this, is that, that $1 billion number, that goal, that aspiration, where a lot of people, when they're hitting their 80s and 90s, are starting to maybe slow down a little bit. You're talking about hitting that next level and continuing to ramp up. What does that look like for you?
A lot of enjoyment, a lot of interest, a lot of learning. And one of the things they say to us old folks is you got to keep learning. I said, I learn more than enough every day.
Right.
So I had just learned something probably 10 days ago about how to go out and find capital. And a guy charged me $250 for his idea. But if he's telling
me, if you turn it into $1 billion, it's 250 well spent. So it's not a bad deal.
Exactly. That's exactly right. So today I got in conversation with my first family office.
Oh, okay.
Have you ever heard the term family office?
I have. Yeah, absolutely. Yeah.
I'm impressed. Good job. I hadn't.
Yeah.
So.
Really? Okay.
Yeah, I hadn't.
Right.
So I'm talking. I have a list that's allegedly good, and I read, and this, so you got to do a little research, right? So I went on and put family office in, and the machine comes up and says, "Oh, here's a great article by Forbes." Well, old man Forbes signed an autograph for me when I was a little kid.
No way! So, wow.
Yeah. Way back in the day, I had done an audio book for investors, and I was way up front. I think the name Tracy out of Canada rings a bell for audio tapes on finance, and he was already pretty big, and I was still a state employee working for the government every day, and I put this thing together. I sold a few, just like many of the people that write their own book. So that's how I met Forbes, and so I like reading Forbes magazine, and they had a 4-part series on family offices and what they're like and what they're like to work for and so on and so forth. So where are we? What are we supposed to go back to?
Well, again, we're talking about the raising of capital. And then because you have so many of these entities that you're working within, what is it that you're currently, like, what round are you in for which organization? We talked a little bit about kind of the coding aspect, and something that I've been watching incredibly close is this AI revolution that we're seeing right now.
Isn't it great?
Well, it's wild. Yes. But this is where I'm struggling with right now, is that, disruptive technology, like what we're seeing with artificial intelligence, is just that. It's disruptive, right?
Very.
But so a company like what you're doing with your coding, what sort of coding are they doing pre-AI? Now that pre-AI is like 10 to 15 years ago, to be quite honest. Like, AI is not something that we haven't had before. It's this generative AI, this thinking for itself AI. So how does a coding company, how does a computer engineering company, for lack of a better term, how does it pivot? How does it change if you're seeing these codes that are being able to be written by this generative artificial intelligence?
And they're good. Many of them you have to make 1 or 2 small corrections in, and they're protected and they can go out the door.
Right.
So I would say we went from 5% to 10% to 30% to 60%. And a lot of it's beyond that 60%. It just is still. Doesn't mean tomorrow they won't come out with a new one that
Right.
we might have to move further. And then our job will become more of a we will take care of your system for you,
Okay.
as opposed to we're going to design it up front, we're going to install it, instead we will end up in a situation where we're more of a service company.
Well, I guess that
Simple,
makes sense, right? Like again, if you're having, and that's where I think I struggle right now with the artificial intelligence assessments. So for the longest time, I have been a little bit hesitant to jump headlong into, and I'm going to call it the mania within the market, right? When we look at companies like Nvidia that have seen their chip companies skyrocketing value, one of the things that I'm concerned about as far as an investor is, first of all, geopolitical risks. Like 35 to 40% of their chips are going to be going to China. Well, we got a Taiwan problem. Taiwan Semiconductors is making the chips. There's a huge geopolitical problem there.
correct.
What happens if we end up in a situation where artificial intelligence is starting to take away the mass employment? What kind of social issues do you think that we're going to run into if we have that sort of, deflation in the engineering costs of products? You have all these people that become unemployed. And I go back to the age, and you have an understanding of this probably better than myself, but the age of, the internet, right? The tech bubble of early
Oh, we
2000s.
thought it was going to be horrible.
Well,
Have you looked
that's
at the
kind of the
employment numbers yet?
what does this look like? And that's, coming from your experience, you have a better understanding than someone like myself.
Yeah, I just think it's like the Industrial Revolution and everything else. It just kind of rolls off the floor. Somebody picks up an idea and says, well, I guess I got to make a living, and this is my idea, and let's go do it, right?
Very cool.
Amway, let's talk about Amway. I mean,
Right.
that may be too old a company for you, but
No, I do know Amway. Yeah, for sure.
they made a lot of money.
Yeah.
So, all right. I don't see the impact over time.
Interesting. So you think that as we see deflation, as unemployment starts to kick up, that these people will more or less pivot into new roles, augmenting artificial intelligence as opposed to being displaced by it?
Yes. I was a budget analyst for the state of Oregon for a long time.
Okay.
And I remember going through each agency and having to eliminate 15% of the jobs.
Right.
You know how many people thanked me 5 years later?
Right.
Thanks. I started this kind of company. You'd walk down the street, expected something different, but people would thank you. It's like, cool. Oh, okay, that's good.
Yeah. No, for sure. And I think that's where, I see evaluations in companies when we look at like Microsoft and where they've pushed over the last little while. We've seen these parabolic moves to the upside. With very little pullback. Since we've seen the bonds come back, and again, we can go back to the multifamily if we want to there, but as the bond rates have fallen off that 5% range on the 10-year and even our 2-year, like we're uninverting on this 10-2 inversion that we're having right now. And traditionally that sparks recession concerns when we see that uninversion occur. Right. But it seems like we're doing it at a fairly rapid rate, which traditionally has been a fallout. We have Jerome Powell this weekend on Friday. He's going to be discussing at the next economic meeting that they have scheduled. And last month when he talked at the beginning of November, a lot of the market said Powell is done with rates. And again, this goes to you, ascertaining capital right now. He's done with going for rates. The rate hikes are done. We're going to see pauses. And then they're scheduling in 4 reductions in 2024. Where we are right now, we're seeing the cooling of inflation. I don't know if we're done with inflation, but
we're well into it.
We absolutely are. There's no question. But I also look at, the price of oil overseas right now is in around that $75 a barrel range for WTI crude. If that falls under 70, you're going to see OPEC plus here. They're going to start cutting production. That's going to push these dollar per barrel back up. That is going to be inflationary again. We are in the lowest end of the oil and the energy costs that we've seen. When we look at natural gas, like the Henry Hub, what they're doing with natural gas costs right now, They are not anticipating a cold winter, a hot summer. Their production is way down. So we are at the lowest possible commodity spend possible right now. And we're seeing inflation go down. But what happens, and you've lived through this. You lived through the oil embargoes when Iran pushed back. When you saw the Middle East on fire before. I'm not totally convinced that we are done with inflation and that the costs of borrowing are going to just fall off a cliff. How does someone like yourself that's a sophisticated investor, how do you hedge? How do you keep in mind? Maybe it's by owning 10 companies. Maybe that's the best way to do it with multifamily tied into that. What do you suggest for the investors out there that are trying to make their first billion as you rocket to your billion?
Well, I've always believed I needed some kind of not a back door, but at least a crack in the back door so that I had some place to turn to, right? And I knew I couldn't even talk money with my father. He thought I was crazy. So that was never a back door for me. I got a couple things that aren't attainable, but that's okay. So
setting dreams, that's not a bad way to live.
Yeah. But you have to make sure that you know what's behind you. So like you buy term insurance so that if something happens to you, the people that you want protected are protected, right? You keep cash around so that you can make sure that you can put a roof on the house and a roof over their heads and food on the table, and then you just keep moving in that direction. I don't think people should be too leveraged. I mean, so that's coming from a guy that's been so leveraged. Okay,
right.
I once sold a building for $275 down. Woman paid me like clockwork for 15 years until I called her and told her she could get a better rate from the bank. Okay, yeah. So I've done that a few times. I've been crazy. I know that, yeah. But my risks are always calculated. I mean, the woman had a fire in her eyes when she said, "I want your house." I said, okay, wow. We're off to the races. Sure. And then, I mean, I've done so many people say I'm a little crazy when they read my book. I don't think so. I've never saw it that way. I got sideways once in a big deal. 5 guys had put $2,500 in a bucket. So we had $12,500. And we were 2/3 away, finished with the project. And one of the guys kicked up his heels and said, "Stewart, you're getting too much." I said, "You get me full time. You're getting my wife half time. I deserve every penny of it." All right. So it took us almost 3 years to untangle that partnership. And then I just put my head down and finished the project. I sold what property I needed to, and so on and so forth. And I never looked up. And then 2 years later, I was worth $30 million. It's like, okay, I guess
not
that's
a bad deal,
right?
Yeah, so no, that's good. So, Mr. Stewart, why don't you tell us a little bit about where people can get in touch with? First of all, your book. I think your book is a fantastic read. When you go through it, I think it tucks on all the things that you want in life, right? You know, it tells some hard stories, but it also talks about that wealth generation and creation. How do people get in touch with your book, firstly?
It's on Amazon. It's 99 cents because I want everybody in the world to read it, because I think it's a little bit of inspiration, a little bit of motivation, and a little thing to be aware of. Okay, so it's at Amazon, 99 cents. It's Learn, Learn, Apply, Apply, and Grow Rich. And if you just read the first 5 pages, you'll get enough to dwell on in the first 5 pages, because I list like 20 some odd traits you ought to be working toward.
Right. So, and then your next project after that, your media company, again, if you want to just kind of give us the name of that one again.
Wilder Way Media.com.
Perfect.
WilderWaymedia.com.
And Mr. Stewart, if a bunch of people out there want to give you a couple $1 million, how do they get in touch with you personally?
Continue forward at live.com.
I love it. folks out there, I want to thank Gib Stewart for joining us today. Mr. Stewart, it's been a pleasure. I love having conversations with gentlemen like yourself. You folks, you come with just a life of experience. And when I talk about some of the events, we talked about, the oil embargoes in Iran. We talked about those sorts of things. Your generation has a calm because they've seen it, where we look at it and we're like, oh my gosh, what's going to happen? The world's imploding, Chicken Little type kind of thing. And the market often reacts because of that. So I appreciate where you're coming from, and I appreciate your advice. And for those of you out there that maybe didn't hear about it today, we lost a financial giant in Charlie Munger. He was,
really? Okay.
Yeah, died this afternoon. Yeah, Charlie Munger of Berkshire Hathaway, one of the foremost investors and entrepreneurs of our time. God bless them, and rest in peace.
True. Good.
James.
Thank you.